and say, where would I put my stop loss? Well, your stop loss would have to go. I said I'd give you a Fibonacci sequence, and I said I'd show you how to trade with Fibonacci. So I'm going to do that today. I'm going to trade with Fibonacci. I'm going to show you how you can use Fibonacci in your daily trading schedule. For those of you who want to know, just so that you know, for the last 30 years, I've been trading price action, support and resistance, but I have traded with other methods. I have used other methods, and I have learned to use the other methods. And I'm showing you this because some of you guys will be using different methods to do your trading. And you might want to use different indicators. You know, we don't use the indicators on our trading. We don't like to use the indicators on our trading. But I don't say that any system doesn't work. All the systems actually work. So I'm just going to give you a quick rundown on the Fibonacci today. And there's not going to be a lot of editing in this video, but there will be some. There has to be some. But it's going to be a quick one. I'm going to show you how to do Fibonacci in under 20 minutes, just so that you can use it, because it is the one, let's say, I wouldn't call it an indicator, but it is an indicator if you think about it, but it is the one system that I would be prepared to use if necessary. And it's the one system that I actually do like, and I do think it actually can work. It's one of the ones I like. It's one of the ones I prefer. So there's a lot of different systems that people come to me with and say, will this work? Can this work? I want to use this. I use this. I use that. But when somebody tells me they're using Fibonacci, I'm all for it. I'm kind of like, okay, that's a good one. I like that one. That's pretty decent. But what is Fibonacci? The sequence follows a rule that each number is equal to the sum of the preceding two numbers. So Fibonacci is a sequence in nature. So another description for Fibonacci is Fibonacci numbers can also be used to define a spiral and are of interest to biologists and physicists because they are frequently observed in various natural objects and phenomena. The branching patterns in trees and leaves, for example, and the distribution of seeds in a raspberry reflect the Fibonacci sequence. The Fibonacci sequence is not only used in maths and trading and whatnot, it's used in the universe, it's used in the world, and it's got its methods and its reasons. So all I'm going to do today is show you how to use it and why it would work in trading. So let's just pull this down. Let's go and have a look at the trading systems, then we can take it from there. I hope this is not going to be in the way when we look at our charts. But let's go and see, and let's go and take it from there. So what you do is you get your chart up. This is the S&P 500, which is, yeah, it's gone up. It's pretty high. And the interesting thing is, you know, when you trade with supply and demand or support and resistance, you look for a level up there, you look for a level down there, you look for levels in between, and these are the levels that you're going to trade with. With Fibonacci sequence, what you're doing is, this is the Fibonacci sequence. You take it from the lowest point and you run it up, and then you've got this range of numbers. So you got 0, you got 0.236, 0.382, 0.5, 0.618, 0.786, and 1. So effectively, 0.618 is 61.8%, 0.5 is 50%. You can work it in percentage as well. The point of the Fibonacci is this. You take this level and you're looking for an area where you can buy again once it's correcting. Now 0.236 is not the best area to buy from, but if you get a green bar out of here, that's a start. 382 starts to get a little bit stronger, and if you get green bars off there, it's a good area to look at. It's an area where it'll find its level and you'll want to take a level off there. But the 50 to 618, that's the important area. That's what we call the golden area. And that's the spot you're actually looking for, because this spot, if you get a trade out of here, that's where it's going to go well. And I'll show you an example of this, because it works both ways, by the way. Whether you're going short, whether you're going long, doesn't really matter. If you get a trade out of that zone, it's going to be a reasonably good trade. Okay, so any trade out of that zone is great. But you can trade off the 38. You can trade off the 23. Stronger trades are further down. If it gets to the 78 and it goes through there, then basically it's kind of invalidating, goes through the 1 and it starts looking down here. You can use this to take profits if you're short. If you're short, you're looking for it to get up to these outer levels. So you can use it for that. Now, I'm just going to show you what happened here in the past, for example. So let's put Fibonacci on again. And if you come to these levels here, see, that would have been your high at the time, not that, obviously that. That's where it would have ended and that's where it would have started. And you would have been saying, I'm looking for a trade to go long again. It's correcting over. Where am I going to get back into this market? And it falls over, falls over, falls over. Look where it turns around. It hits the 50, the 0.5, goes up a bit, comes down, spikes down to the 618, spikes into this area, comes out and goes long. So effectively takes a long trade off that area and it goes into this golden zone and goes out. Very, very strong area, very, very positive area. And you'll find it on most instruments if you're looking for a trade. Now, don't take this as easy. You know, as I've said to you before, firstly, don't change your system every 5 minutes. And secondly, take into consideration that the market is still a 50-50 game. It's not going to be, oh no, I got Fibonacci now, I can't go wrong. It can go wrong, and it does go wrong. It goes wrong on numerous occasions. And places where I find it difficult to use is in a market that's not really trending. It's more of a ranging market, but it does work here. So for example, here's the FTSE, there's the low. Oh, goodness me, can you believe it? Remove 3 drawings. Oh, now I've removed all my support and resistance as well, but it doesn't matter. There's your low, take it up, there's your high. So what are we looking for here on the FTSE? We're looking for this area here. If it comes down to the between sort of 82 and 81.50, you're kind of looking at a good long trade, and that's what you're looking for. So even though this is ranging, you're finding your trades in that level, and that's just what you're looking for at the end of the day. That's where you want to find your trades. The euro US dollar has gone kind of short. So let's see how it works on a short trade. You take it from the top, you take it down to the bottom. Now you're looking for an area for it to come back off. Look at this, it's gone up. It's hit this area here at the 106, spiked into the 50, and now it wants to come back into the support and then go out. So that's your Fibonacci. Oh yeah, now you see now. I've got to get rid of the Fibonacci. Can I just remove that? Yeah, there you go. Just remove the Fib, because I don't want to remove all the other drawings all the time, because I got to put them all back in, man. Yeah, this Nikkei, which we're actually kind of almost at stop loss on, because what I would have done here with the fib is I would have gone, there's the fib, take it from the low, take it to the high. What am I looking for here? I'm looking for it to come back into this area here to take a long trade. So it should actually come all the way back down to here and give me a better trade. But at the moment, it seems like it wants to go up and take my stop loss out. But that's one of those things. So guys, that's how fib works. I mean, it's not rocket science. It's something you can work with. I don't say you know that fib is the best science in the world. It most certainly isn't. But it is pretty close to support and resistance. It works in a very similar method. And the reason for that is it gives you these levels, and it gives you exacting levels. So it gives you that line, but that line gives you a block between the 50 and the 61.8. It's an area where there'll be some money. And if you look up on the internet what Fibonacci is all about, and you know what the numbers mean and how they work, you'll get a better picture of why these numbers are important and why these numbers in the universe actually do quite a lot for you. So if there's one system that I would say, yeah, you can use that, that's not too bad, you can have a bit of fun with Fibo, then this would be the system that I would choose, the system that I would use, and the system that I would say, okay, you can have a look at that's not too bad. I like it. And also you can take it from any one of these levels. You can actually take these trades. So yeah, Fibo, not the worst, not the worst at all. And as I always say, the best way to take your trades is with the psychology of trading. Psychology of trading is really, really, really important, because when you take your trade, you still have to work out what your stop loss is going to be. You still have to work out that your stop loss has to be the same across all your trades. You still have to realize that you only risk 1% on every single trade, and you still have to understand that you got to make more on your wins and lose less on your losses. If you want to know more about that, check out my previous videos, and then you'll see what I'm talking about. Guys, trading is risky. 60 to 80% of traders do lose money. And if you don't like risk and you don't like losing money, you just shouldn't be trading. And really, in all honesty, 5-minute traders and day traders, 99% of traders actually lose money. If you want a free Forex book, drop down to the description. There's a free Forex book for you down there that you can go and grab and you can go and enjoy for yourself. How do I trade? How do I trade into the market? And how do I trade in while keeping a good level on my trades? Well, the best thing to do, guys, and I'm just going to open this up a little bit. Please excuse the non-edited situation here. But anyway, here we go. I'm just going to talk to you a little bit about how you can enter your trades. And what you do, you get into the trade and you understand that every single trade you take has the same stop loss. Don't change the stop loss on any of the trades. Don't feel that because I trade the US 500 better than I trade the DAX, that I'm going to trade more on the US 500 and less on the DAX. No, you must trade the same amount. The way you do it is you look at the trade, and you say, where would I put my invalidation area? Stop loss. And then at that spot, you say, okay, now I'll work out $1,000 back to the price, the cost that I'm going to pay for this trade. That's my stop loss, $1,000 on a $100,000 account. So it's a 1% stop loss. If it's a $5,000 account, it's $50, right? You work out that 1%. You say, now that's my trade. That's my loss, my $1,000. If I lose this trade, I lose $1,000. Then I work out where I want my target profit to be, and it's got to be at least 1.5 or 2 to 1 or 3 to 1 or much more than your loss. Then you take the trade. That's the size of your trade. When your trade goes into profit, you move the stop loss up to break even. And when I say when it moves into profit, I mean like $500, $600, $700 into profit, not $20. And then you move your stop loss up to break even, and now your trade's completely free. Firstly, you paid $1,000 for the trade, and now you've got a free trade. So you haven't lost anything. You're $700 in profit. It starts moving further up. Move the stop loss up into profit and start following the profits up to your target. When it gets to your target, move the stop loss up right behind the target. If it carries on going north, good stuff. If it doesn't, comes back, takes out, you make your profit. You'll have a whole mishmash of smaller profits of the stop loss coming back and getting taken out, but in most cases, it'll reach the profit target. If it goes into a loss, do not dollar cost average. Do not move the stop loss away. That always ends in tears. You will lose money if you do it that way. You've got to keep everything the same. You can't keep changing it on every trade, because if you keep changing it on every trade, that's when you start losing the money. So in other words, let's just move this down again. I gotta, it's sometimes a little bit difficult to work with the technology, eh? Well, if you have a look at this, I mean, if you were going to take this trade, you would wait for this to sort of come down into this level here, and then you would look for a trade and say, where would I put my stop loss? Well, your stop loss would have to go down here, sort of below these areas here, into this gray area. That would be sort of your stop loss. Your take profit would be up here into the red area, perhaps even above it. And you can turn this around. You can start looking at these further down levels as well. They come out, they're minus levels above the zero. You can start looking for targets up there if there's no area where you can figure out where it's going on the upside. Looking for profits, not too difficult. You can simply follow that up, and you can simply look for your profits above the 1, above the 0 in this red line here. Keeping it simple, guys. I'm keeping it as simple as possible for you. So take your trade. When you've got a green bar, you take your trade, it goes up, goes into these levels, and you just follow it through until it gets up into this red area. There's your profit levels. You can keep moving your stop loss up. Now with Fibonacci, it's a lot easier than support and resistance, because what you can do here, for example, is with support and resistance, you have to move your stop loss up on gut feel. With Fibonacci, what you can do is if you took the trade at 61.8, okay, and you went long, you can move your stop loss up when it goes up into the 0.5 to 0.38 area in here. You can move your stop loss up here, and then when it goes through the 3.8 up to the 2.3, you can move your stop loss up to here, and when you move into the red zone, you can move your stop loss up to here. If it goes through the red zone, you can move your stop loss even higher up. You can actually use these lines to move your stop loss up. Can you believe that? It makes your trade so much easier, so much less hassle for you. So, it's actually a great system to trade with. I love trading with Fibonacci. I think it's fantastic. I don't use it. Obviously, I don't like having too much stuff on my charts. As you know, I trade with basically nothing, but it is great to use it. It is here. It's a fantastic method. It's a method that will clearly give you an indication in the market as to how you can make money on a regular basis. So guys, thanks for watching. I hope that helps you somewhat. Do come back for the weekend video where I'll give you a rundown on the markets, and also come back for the live shows next week. Tuesday, Thursday, we have the live shows, and we chat, and we give a bit of banter back and forward and what have you. So that's Fibonacci in a nutshell. And as I say, I think I just explained it to you in a matter of a couple of minutes, so that always helps. I mean, less than 20 minutes, you know how to trade Fibonacci. Can you imagine? So easy, so much less hassle than all these other courses that you have to go on. Imagine you go on these courses and you pay thousands and thousands and thousands of dollars for them, and they just don't get you anywhere. Remember, the course will teach you how to trade. The trading part's easy. Even like this Fibonacci, it's easy to use it. But when you start applying real money to it, it becomes incredibly difficult and it becomes a completely different story. As I've always said to you, it's not the squiggly lines that make the difference. It's the trader that makes all the difference in the trading. It's the trader that makes all the mistakes in the trading, not the squiggly lines. All the squiggly lines do is give you a high probability trade, nothing else. That the actual trading issues and losing and percentage loss and why only 20% of traders win is because of the actual traders, not because of the system on the charts. So have a great weekend, guys. I hope that video helps you trade Fibonacci. If you've got any more questions, come back to the live shows and I'll show you on the live shows as well. Till next time, thanks.